Hi, friends. Welcome back. So, the Fed just had their meeting and announcement. It is a rate cut, 25 basis points. And we actually expected that, so no surprise there. But the real fireworks were essentially Federal Chair Jerome Powell. Tell us your opinion of politics. Tell us what you really think. and what do you think about if Trump wants to fire you? So, according to Fed Chair Jerome Powell, he's not leaving. And this is actually the quote, not permitted under the law. So the question is, what if Trump wants to demote you, get rid of you, etc.? Powell's like, it's not permitted under law, so I guess he's staying.
Do you believe the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not what?
Not permitted under the law.
Thank you.
Now, it's interesting, if you've been following the story, you would know that Trump and his team have been thinking about, okay, can we give suggestions to the Fed? Can we put some more control on the Fed? Can we just remove whoever we want, whenever we want? That's sort of been a discussion, but as of now, Powell says not permitted under the law. I'll let you be the judge of what you think that means. In my particular opinion, it's like, well, I'm not leaving. That's, what essentially my job says, but theoretically the law could change. So you never know on that kind of stuff. I'm just saying theoretically, but right now, not permitted under the law. The other issue as well is they kept trying to get him to talk about, particular Trump policies or anything coming in.
Sure. So on your first question, I'm not going to talk about anything that relates directly or indirectly to the election. On the second one,
the Fed is independent, supposed to be. And when you ask them sort of political questions, it is a kind of a dicey thing for him to say anything.
This is the great question, and it's the one we think about all the time. So I'll just say a couple things. There's nothing really surprising here. What we know is that the unemployment rate is low. We also know that it's moved up significantly from a year or so ago. So we've seen a big change upward in unemployment. Sometimes that has meant bad things. So far, it doesn't appear to be. It appears that I wouldn't say that the labor market has fully stabilized, because I do think it's continuing to very gradually cool, but it seems to be in a good place. And our policy, of course, is designed to keep it in that good place, to maintain the strength in the labor market while also enabling further progress on inflation.
We don't guess, we don't speculate, and we don't assume. So think about how okay, because we really want to know what the future is going to be. One of the problems I think the Fed is facing is, right before they're like, okay, we got to bring inflation down. We know a lot of people are struggling, and we were also worried about growth. Now, with the new Trump policies, we talked about this before, tax cuts and tariffs, chances are those are going to be inflationary. And one of the problems I think the Fed, and this is my opinion, when they cut 50 basis points before and then they do 25 now, they're kind of stuck. If they do more cutting, okay, and you put in the Trump policies, that you're basically ensuring inflation. The other problem is that what if we have slower growth? That's what's projected going into the next year or so. And so then you're looking at, okay, Trump policies are inflationary. We're also looking at slower growth. So what are we going to preference? If we keep cutting, that just adds on to inflation. If we're worried about inflation getting too high, we could theoretically raise. And he didn't actually remove that off the table. I'm talking about Fed Chair Jerome Powell. Theoretically, they could raise. You never know, but I think the chances of that are real slim, to be perfectly frank. There's a lot of, pressure for them to sort of get the money flowing again. Wall Street at the moment, and this has been through all the headlines and stuff like that, are sort of celebrating and salivating, right? So both celebrate and salivate that there could be more deals, going on the table, more murders and stuff like that. Plus, you got Trump deregulations, these sort of things. So I mentioned this sort of other political stuff because it does play. And the Fed, these people are all economists. They understand what's going on. Just they can't necessarily state certain things publicly. Now, some of the things that they did state publicly, and the way he said it's like, it's nothing weird. My predecessors have said the same thing. And so they kind of dance around saying directly on policies, but they do mention it.
I have said many times, no more, no less than what the predecessors you mentioned have said. And what that is that the U.S. federal government's fiscal policy is on an unsustainable path. The level of our debt relative to the economy is not unsustainable. The path is unsustainable.
Basically, he was saying the path that we're on is unsustainable. That was the word they used, unsustainable. Now, what's very interesting though is that he mentioned path, meaning the direction we're going, and talking about fiscal policy. But he kind of gave two answers here. The other answer was like, where we are right now is okay regarding debts, and or well, okay, the right word. I guess you could say sustainable. But if we go down the path that we're heading, too much spending, not enough revenue going in, right? Deficit spending, it's unsustainable. So I mean, it's kind of funny when you hear Jerome Powell speak. It's sort of these cryptic, sometimes not cryptic ways. But from what I read of it, when I hear the unsustainable past stuff, I just feel like just we got to figure out something. That's just how I read these things. The other issue is as well, which I want to mention, which is related to the Fed, related to Trump tax cuts, and also understand how it affects the stock market. Is okay if we are going to do all of these cuts, right? And we're essentially, I think one of the things that Trump was talking about, even cuts to people who have Social Security, is just not enough money to go into that system to sustain it. So some of the, and this was sort of estimates. I got a couple different estimates here. We may have to do benefit cuts to Social Security if we're doing tax cuts, right? Because you got to figure out how to pay for said things, and one way to pay for it is just cut your benefits. You have up to 33%. That would be more the higher end. That's coming from the CRFB, so that's Committee for Responsible Federal Budget. And then you have it directly from the government, which would be the Congressional Budget Office, and they're saying maybe cuts of 23%. So I don't think it's crazy to talk about benefit cuts to Social Security. I'm not saying good or bad. I'm just saying, just practically speaking, if you don't have the money, you don't have the money. The other issue as well is if you go with the proposed Trump tax cuts, you might be moving up the projected by of sort of insolvency of Social Security by 3 years, where you start to basically start draining the system. I think projected is something like 10 years now, where we start to go into the drain the system insolvency. So the Trump policy will move that up by 3 years. The current issue right now, and I don't know, I don't think it was an issue in the election. And we've already have a new president, so now we just got to see what they're going to decide. It was saying here, Social Security is financed through payroll taxes. Workers and employers contribute a combined 12.4% on up to 168,600. So theoretically, we could raise that to 200 or 250 or something of that nature. Raising taxes is never that popular. I understand that stuff, but the problem is it's a demographic issue. If you have people are living longer, right? Essentially, they use up more benefits than previously projected, and also too, you have less workers paying into the system. So, we just have a demographic issue. More elderly people retired, less workers at the bottom. The USA has figured out a bottom in terms of think of it like a reverse triangle, right? Or reverse pyramid. If you want to, it's funny when you ever say the word pyramid. If you want to think of Social Security like a pyramid scheme, so be it. But one of the ways that the American system is different than say other countries is we have a lot more immigration in USA, so that's able to help the system afloat. But we'll see. I think all of these things, put together, are certainly things to be concerned about.
Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume. Now, just in principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
I keep seeing slowdowns in China. So what they're talking about over there, and you gotta mention this in a worldwide phenomenon. But in China, they're talking about, okay, we got slowdowns, we have a real estate meltdown. So are we going to basically print a bunch of money? Are we going to buy out all these properties? And what kind of stimulus packages are they going to do? They're probably going to do all sorts of stuff. I keep seeing this every single day. I like, okay, what's going on in China? More real estate meltdowns, more stimulus, etc. But they're still projecting, slower growth over there than what was previously thought. So it just, things are slowing down. If that's going to be the case in China, it's most likely going to be the case in the USA as well. And you're dealing with, again, you're worried about growth, you're worried about inflation, and so the Fed's looking at both. They're also watching unemployment. Now, according to the Fed, they always say things are good. They never want to panic anyone. It's like, I don't know. I mean, I'll give you some quotes here, kind of stuff that they say. It's funny how he talks. He says okay, so, and that was nothing to do with the recent election or potential fiscal policy changes. It says here, quote, We don't think it's a good time to be doing a lot of forward guidance. I guess there's a fair amount of uncertainty. Then he says here we have to avoid risk, and to avoid that risk, that means you want to move carefully. They also talked about, would you raise or anything like that? And he says, like, I wouldn't rule anything out that far away, but that's certainly not our plan. When you're talking about labor markets, this is again coming from the Fed. It says Fed tweaks language to note, quote, labor market conditions have generally eased, and then repeats, the unemployment rate has moved up but remains low, right? So this is the kind of statements that you get. They're, like I said, a little bit cryptic because you're like, okay, so they're saying we acknowledge that more people are losing their jobs, but the unemployment rate is low, and that's obviously not comforting to someone who just lost their job. And I don't want to make jokes about stuff. I'm just telling you what the language is, and it's frustrating and irritating, going through all these things all the time, because I know from the average person's point of view, things are awful out there. Like housing costs are really, really expensive. Now, I think that's really one of the big things that people are facing. And the problem is, though, that the Fed can't necessarily, control everything related to that. They can't say, hey, we're the Fed, please build more multifamily houses, or hey, we're the Fed, please get Wall Street out of the real estate market. They can't really do all these kind of things, but they can have languages related to this stuff to sort of set the mood, I guess you could say. Other things that they said here, statement removes reference to further inflation progress, noting inflation, quote, has made progress towards the 2% objective, but remains somewhat elevated. So they removed the language of further, right? So remember, all along they were saying, we'll start cutting when it's 2%. They never really got there. They were just, going towards that direction. Also, it says here, statement removes language saying committee has, quote, gained greater confidence. So I guess they remove that language, gained greater confidence, that inflation is moving sustainably towards the 2% target. So I guess they lost the greater confidence. It's according to this. Other part was a statement maintains a language. So I guess they kept it. Statement maintains language saying risk to achieving employment and inflation goals are, quote, roughly in balance. So, you guys make of that as you will. Whatever the Fed says, and I say this all the time, whatever the Fed says, whatever the government says, it matters more to your neck of the woods, right? So, the way you can think about it is, if your neighbor loses their job, it's a recession. If you lose your job, it's a depression, right? And like I said, I don't want to make any jokes about this stuff. It's hard to take this stuff, I don't want to paint doom and gloom all the time. I know a lot of channels like to do that because it's like, I guess, more entertaining. I just read the stuff and like, yeah, I mean, it's not like I don't know these things. I mean, it's not like you don't know these things either, that it's tough out there right now, but it is a real challenge for the Fed, to figure out, like, can we sort of push back against the pressures that want them to cut. In my particular opinion, they should have been holding in these times, but when everyone else is cutting, and I'm referring to other countries, you feel like you have to cut too. And then when Trump comes in and he's going to be going inflationary policy, then you got a real challenge. If I had to bet, guys, I think we're looking at, low growth, high inflation if I had to bet. Is it going to be like crazy high double-digit inflation? Maybe not. But I can't predict that far in the future. So in that regard, I'll stick with the Fed. Is like, hey, I can't predict 10 years in the future, right? The one thing I will say, though, is that whatever's going on in your neck of the woods, maintain the plan that you're on that makes sense for you. For me, just surveying the market, I feel like a lot of things are overvalued. What's been carrying the market, our past year or so, or a couple of years, has been the whole AI craze. Valuations are really, really high, and we're essentially going to be looking at individual companies to see if they can justify those valuations. Basically, if you're new to the stuff, you make essentially bets, essentially what it is, on a particular stock or company. If you're buying individual stocks, and think, okay, I give them my money and I hope that they're going to grow my money, and they're going to be awesome. And then every quarter they come back and report, are they growing their money or not? And they're also part of a larger system, which is essentially, right, the economy, the Fed. What they're doing, is money easy to come by, or is money difficult to come by? And you put all these things together and you got essentially the market. It's a lot of bets. One of the best ways to play this thing, if you don't want to mess with individual sectors or companies, is just buy index funds. You put some money in the market, right? And so that way Sometimes some sectors are up, sometimes some sectors are down. You're paying, low fees on these things, you're going to be fine, right? Also, if bonds look to be attractive, so if they start to hit 5% like treasuries, like that's not bad at all. There's nothing wrong with that. Even now, I think you can pick them up for 4% again, not bad at all. The bet though, I think is that rates or yields, I should say, are likely going to go higher. That's sort of the bet right now. You see it in the bond market, and this is sort of also sort of like before people were thinking, okay, that the Fed was going to do more cuts next year, but it looks like less. That's what the market's been saying lately. So like to hear your guys' thoughts on any one of these things. Again, the Fed's got to worry about growth. They got to worry about inflation, and got to worry about if someone's trying to fire them. But at the moment, as Federal Chair Jerome Powell says, not permitted under the law. So I do appreciate your time, everyone, and I'll catch you on the next video.